Welcome to today's video where we're going to discuss trend following, which is the strategy that I use when trading. So in the Euro USD here, we can see clear as day, we are in an upward trend. If we just minimize this, we can see here we bounced off this resistance area and we've been in an uptrend since the 14th of February 2024. So we've been in an uptrend here for almost a month, and as you can see, we entered the trade here, and we're going to discuss where and why we entered where we did enter. So if you're new to this, the trading platform that I am using here is TradingView. I'll put the link in the description below. I've got no affiliation to TradingView. It's just a platform I have always used. It's not an affiliate link or anything like that. So we're on the Euro USD here, and I'm going to come to the daily time frame. So I always place my trades in the daily time frame. When I started off trading, I was trading 3 minute. I moved to 5 minute. I moved to 15, to 1 hour, to 4 hours, and now I'm on the day. The reason for that is I have found that personally, and a lot of people have spoke to, that there is a statistic out there that says that 90% or 86% of traders fail. If you were to break that down and look at what time frame the people are trading that are failing, you'll find they're in lower time frames. Because when you're in a lower time frame, not only is it more difficult to predict the direction of the market, it is you're sitting there watching candlesticks go up and go down if you're in 3 minutes or 5 minutes, and you feel as if you're investing time into what you're doing and you want a return on your investment. So you end up placing trades that aren't there. You end up placing trades that otherwise wouldn't be. You end up placing trades just solely because you want paid for the time you've invested in there. And that's where a lot of people go wrong. That's where a lot of people fail. So the daily time frame that I'm on is a perfect time frame. It allows the market to breathe. It allows the market to absorb any negative news. And if you feel it's going to go in one direction after your analysis, it may very well go in that direction, but first may take a slight dip. If you're on a lower time frames, you get stopped out. In a bigger time frame, you can absorb that information. So here we're on the Euro USD. So if I come across here to this little icon here, so I've got the 6 major pairs here. This is all that I've got the 6 major pairs here. So in this column here, I have the 6 major pairs. I tend to only trade these. These are Euro USD, Great British Pound USD, Australian Dollar USD, USD CAD, USD JPY, and USD Swiss franc. I will go down here and trade others on occasion, but these 6 major pairs are the major currencies of the major economies, and they've got a lot of volume in them. If you go down here and start trading some of these, you keep in the trade and there's very little movement. It goes sideways, and so I like to trade the 6 major pairs, but I wouldn't rule out any of the ones down here that I've got listed. So we're in here, the Euro USD. Let's discuss where I entered this trade and why I entered this trade. So you can see here the market is in a clear downward trend. You can see it just with looking at it. You don't need any analysis. You can see the market was up here. These are daily candles. So you can see it's coming down, a little bit of reversal, and then right down to here. So we need to determine, when is the market reversing? Where is the trigger? What tells us that the market is no longer in a downward trend and it's now in an upward trend? Right, so if we come here, you can see I have drew this yellow line, okay? So this yellow line here, so you can see the market comes down, hits off this resistance zone. So I will just highlight this here. So just this area here, this is where it bounced. But remember, we don't see any of this yet, so we don't know. So this is the last candle. This blue candle here is the last candle, because you see a bullish candle, you see it going up. So I've drawn a yellow line here at the top of the last bearish candle. Yeah. So that's the top of the last bearish candle. When that wick gets broke, that is where I would enter the trade. On this occasion, I actually waited, and I'll show you why. So when we broke this area here, if you look at the price here across at the left hand side, you can see we're very near a round number, a round psychological zone. You know, so it's 1.08000, which is a round number, which is a psychological number, which a lot of people would maybe use that as the market's going to, there's going to be a bit of resistance there. It's going to struggle to go above. So I'm going to wait to see what the market does there. Typically, as soon as this blue candle, the last candle on the downward trend, as soon as the wick is broke on the way up, that's where I would enter the trade. But on this occasion, I waited, and I waited until it was 108.085, so just 85 pips above. Even 10, 20, 30 pips can just be taking liquidity somewhere, and it can reverse again. So it needs to be a good volume. So I gave it almost 100 pips, 85 clearance. And then, as you can see, I entered the trade here. My stop loss is below. I'll just pull this out. It's a bit difficult to see here, I know. The stop loss is below the candle, the body of the candle that broke my yellow line. Okay, so I'm just going to lessen the opacity in this because it's a bit difficult to see. Just lessen the opacity on this entry. Okay, that's maybe a bit better. So we are looking at the market here, and we can see it's in a downward trend. Okay, now the market bounced here at this resistance, but again, it could have done anything. We want to wait until this yellow line is broke. So this yellow line is placed, this yellow vertical line is placed on the top of the wick of the last bearish candle. So this bearish candle here goes from here down to here. As soon as it gets broken, that's where we enter. We never on this occasion, because it was a round psychological number, we waited until it was slightly above, and then we entered. And look at the results here, as you can see. So while we're on this, I want to kind of debunk a myth. So you'll see a lot of support and resistance on my charts. So support and resistance is, if you can see this grey box here. So I've drawn this box out because it's acted as resistance here. So a few days, each candle represents a day. So look how many days it touched this zone. Okay, I kind of respected it here, 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 but it never here. Okay, it went right through it here. Maybe a better one to show you is the Great British Pound USD. So if we can see this area here. So the market was going sideways here. It was in consolidation. You could see there was a support, a resistance zone up here, and a support zone down here. So as you can see, it was bouncing off the resistance, bouncing off the support, bounced off resistance, bounced off support, and it was happening repeat every couple of days. And this is how some people trade. I do not, because it's just so unpredictable. Some people trade support and resistance. I choose support and resistance. I will stay clear of the market at support and resistance because it's just so unpredictable. As you can see here, sweep. So looking at this here, looking at this data, you would have thought, oh, I'm going to enter here and it's going to bounce because it's bounced here, it's bounced here. Okay, So we'll draw a circle on this wick here. So we would have entered here thinking it's going to bounce again, and boom, took liquidity and you're out the trade. Now, a lot of people use I've spoke to so many people who use or have used in the past support and resistance. Here is my outlay on support and resistance. So if you've got let's say, for example, you've started trading, we'll just take a round number of, you've lost at 8 o'clock this morning, you lost £250, maybe about $300. So if you've just started trading, it's a huge part of your investment. I don't know how much capital you would have put in, but £250 is probably a week's groceries. You could maybe even go for a meal as well. So it's quite a bit of money. So what do you think is going to happen the next time you're in a winning trade and you get the $250 back? Remember, your whole strategy should be your risk to reward is 2-to-1. So this strategy, support and resistance, you'll find you have a 50 times you win, 50 times you lose. However, when you win 2-to-1. So in theory, when you're losing the 250, when you win, you should win 500. You should maybe even win 750, because it's a 2-to-1 or 3-to-1 strategy. But what you'll find is the strategy goes right out the window. As soon as you've lost the trade, as soon as you get that 250 back, you close out the trade. 8 people or 9 people out of 10 will close the trade as soon as they get the money back that they lost in the morning. And the other one or two, they would probably close the trade when they got to 200 because it's getting close. They don't want it to reverse, or they'll end up in a losing trade. They'll end up losing money because they're losing 250, and then when they're in a winning trade, they're winning 200. And their whole strategy is a 50 win, 50 loss strategy. So that's what I've found with support and resistance. That's what I found with the 50-50, 2-to-1 ratio, 3-to-1 ratio. Doesn't work. Does not work. Psychologically, you totally change and you get out of the market as soon as you get your money back. So I use support and resistance as zones to avoid. So I would never enter a trade here just now. I don't know what the market's going to do. It's been bouncing off this resistance zone repeatedly over the last couple of weeks. And then here it just shoots through it. So what's it going to do next? I don't know. Where do I enter my trades? I enter my trades in zones like here. Okay? Zones here. Because I can see 3 consecutive days we're in an upward trend. Okay? I am kind of halfway between support and resistance. So I don't need to worry about it sweeping liquidity. If we come to another pair. So here's another one here. We're on the Aussie dollar, US dollar. We can see that we've kind of left this, what I've marked out as a kind of zone here. We've left it. We're in a clear upward trend here for the last 3 days. Okay. So you can see here we're in a downward trend. Okay. But then this area got broke here. I never get in here. There was just, as you can see, there's just not enough volume here. So volume's a big thing as well for me to get in on a trade. You can see here when I'm getting in on a trade, the candles are a decent size. There's decent volume in the market, which is a big thing as well. There's no point in entering here because our strategy would be, okay, let's draw this up. So, downward trend here. This was the last bearish candle, okay? And if we draw a vertical line, bearish candle, we'll make that a bit thinner. So as you can see, it was broke here. There was low volume. Candle was too small. I could have entered here, but then you've seen it would have reversed. My stop loss would have been below this candle, so I wouldn't have been stopped out. Potentially have been stopped out here. It's too close to see. Let's expand it up. Yep, I would probably have been stopped out here if I entered here. but I entered when there was volume, as you can see here. Okay, so this move here is 186 pip move. The beauty of this strategy is if you're working a 9 to 5, because I know how hard trading is. I had 2 young children when I started this, working a 9 to 5. You cannot trade the 5 minute. It's just impossible. I remember when I first started trading, I said, I'll get up in the morning before I go to work and get the London Open, and it doesn't, because you need to get your kids their breakfast and see them off to school, and so that doesn't work. And then in the afternoon, well, you're at work. I'll do the New York afternoon session, UK time, that's 6 o'clock at night, perfect. But no, you come home, your dinner's on the table, kids need to go to dancing and to go to karate, it just doesn't work. So this strategy I'm showing you just now, on the daily time frame, this trend following strategy, you can sit and analyse the markets at any time of the day. Typically, I will really do my research. Most will be done at the weekend, Saturday, Sunday, night time, kids are in bed. But I will also keep a close eye on the markets as well during the day. I'll come back at night time. I'll maybe log in for an hour or two. But I'm not. My trades are placed at night time or weekends. My orders are put on, or I set alerts. So, as an example, if I was looking at this here and I wasn't in the trade, and I was looking back here, I would click on this little icon here, add an alert. It would send me an email, give me an alert when I got to this area. So then I can log in. But my analysis, the time-consuming part, and when I say time-consuming, when you get used to doing this, you could analyse these 6 major pairs in less than 30 minutes, once you know what you're doing. So this basically is something you can do when you're working a 9 to 5. You can sit and analyse the markets at your leisure at night or at the weekend. You can set your alerts here that will send you an alert, and then you can enter the trade. You can even enter the trade, most people, if they're working, they can still enter the trade on an iPad or a phone. Let's go into see if we've got anything else cooking here. So we've got USD CAD. So here's another one here. As we can see, we're in a clear. Expand this a little bit. So these small lines you see here, these are maybe when I go into lower time frames, these are areas that have been touched more times. But as you can see here, the entry on the big candle, big downward trend. Hold on to JPY. Here's a successful trade here that happened. And I got out this trade because of something personal on, and I didn't want to let it run. But if I had, you would have seen where it would have ran to. It still looks strong. It's got like 4 solid days. This is the thing, guys, when people overcomplicate this stuff. When you're looking at the charts, look at this. 1, 2, 3, 4 strong downward days. 4 strong downward days. Look, you can get fancy here. So you can use your Fibonacci, so your Fibonacci tool. You can take it from the lowest point here to the highest point here. And then this is your Fibonacci tool that says all markets, once you've identified the low and you've identified the high, will rebalance back to equilibrium, which is 0.5. So if we draw a line here at 0.5, did that go in? Let's draw a 0.5. There we go. Let's make this 2 pixels. Let's make it green. And we'll put it right on the 0.5. Okay, so we'll delete the fib. We've got our 0.5 zone here. So again, this is your fib tool. Once you've identified what is the bottom of the last trend that has finished the momentum. Remember, currencies are fractal. They're not like stocks and shares and gold and S&Ps. Currencies are fractal, meaning they need to rebalance. They need to rebalance. Stable economy, stable currency. Remember that. Stable currency, stable economy, stable economy, stable currency. For example, the US dollar versus the euro versus the US dollar cannot go to the moon. I don't know what it is just now. Let's look. It's £1.9. Okay, so let's go into the weekly time frame. So it's 1.9 today. Okay, let's go back here. This is 2017. Okay, 2017. What do we see here? £1.9. Yes, it went up to £1.20 and up to £1.25, but it comes back down to £1.6, £1.9. Currencies are fractal. They can't go, the euro could not go to, £2. It really couldn't, because it would really affect these economies of Europe and the US. So they need to be balanced, and that's why they're fractal. So back to this fib theory. So in this fib tool here, we'll delete that. That's our 0.5 line. So let's see how many pips are to be gained from this move. If we entered this here, to get to, and remember it's at least 0.5. It will get here. It may reverse a little bit, but it will get here. Every time, repeat, repeat, repeat. So if we take our measuring tool, so you can see there, 168. So this is a big move. It doesn't look big on the screen because we're in the time frame here that is basically daily, weekly, daily. Let's go down to the 1 hour. And you'll see the kind of move. Go to the 5 minute. So here we're on the 5 minute chart. You can see here's the price here just now. And we need to scroll way down. Here's your green. So it's a massive move. Doesn't look like a big move when you're in the daily time frame, but it really is. Big gains to be made here. So I'll probably wrap this video up for just now. I do plan on making more videos like this. So what I may do in a week or so is I will probably do the Sunday analysis. I will probably sit down on a Sunday or a Saturday maybe and upload the video on a Sunday, and I will do the analysis on the markets, where I think they're going to go before, basically what I do, analyse the markets and show you what way I feel the markets are going to go. So until the next time, please stay safe.